Ladies and gentlemen, today is March 13th, 2026, Friday the 13th, and we're just going to call it now. The top is in, sell everything. We've got our signal here. Jim Cramer says he's not buying the 2007 scenario, which means that the stock market's going to crash imminently. We need to liquidate everything. I will remind you, this is the same Jim Cramer of Bear Stearns' fine fame from 2007, right before they went bankrupt, and this guy has been wrong so many times that they've even made an inverse Cramer ETF. That is how wrong he is. Now, to jump into a couple headlines real quick, I saw this. Trump administration set to receive $10 billion with a B fee for brokering the TikTok deal, per the Wall Street Journal. Now, I think they used the wrong B word here. They should have put bribe. I never understood how the Trump administration could just steal TikTok. I mean, under the threat of banning it from the country, sure. Suddenly it goes into the hands of Larry Ellison and friends, and they're willing to pay a kickback of, allegedly, of $10 billion. They call it a fee. I don't know. A little confused there. Seems like a bribe. At any rate, doesn't matter because the Pentagon is sending military expeditionary units to the Middle East, and oil spikes on ground war fears. You mean oil spikes on the realization that a ground war is imminent because the United States cannot just claim victory and go home at this juncture. Otherwise, it would violate it would ameliorate the petrodollar agreement. The U.S. is supposed to provide security to the Middle East, and if it pulls out, Iran would be able to dominate the Middle East. GCC countries, the Gulf countries, would not be able to defend themselves. Now we take a look at oil. It is headed higher, lower lows, higher highs. And you see that this turnaround, the commodities complex is doing quite well. Oil is heading higher. And let's take a look over at the S&P 500. Now, I made a short video yesterday, which I've since deleted because, and I basically said, why hasn't the stock market gone down significantly since the start of the Iran war? You would expect the reaction to be a little more than 300 points on the S&P 500, but perhaps we're just getting started. Deleted it because, my rough gist was we are in the middle of the crack-up boom. That is, Donald Trump gets his man into the Fed chair position in May. That means lower interest rates and credit expansion are coming. So theoretically, you're going to want to own some form of assets in order to weather what is probably the hyperinflationary storm moving forward. You've got the U.S. has $40 trillion in debt. They can't raise interest rates. Let's go take a look at the 10-year. They can't raise interest rates to Fed funds, they can't raise interest rates to 1980 levels. There we go. Fed funds. Let's go look at Fed funds. They cannot raise interest rates to this 19% level, which they did to quell inflation after stagflation of the 1970s. Can't do it. Just like I can't seem to log into this app. At any rate, they can't do it. $40 trillion in debt would mean that the interest expense, if they raise them much higher, you can't go much higher. Otherwise, the interest expense on $40 trillion in debt would render the whole system interest expense would exceed tax receipts and the whole thing goes kaput. So the gist is that we all know that credit expansion is the name of the game now. Sure, you can get a sell-off in equities, and obviously you're starting to get a sell-off in equities here to some degree. So be that as it may, who knows how much lower this goes, but ostensibly you're going to get lower interest rates at some point, credit expansion, you're going to get inflation, and we're probably in the period of stagflation. Now, also, let's go take a look at the famous Buffett Indicator. This is total market capitalization to GDP. We're currently at record highs, so if you cut the S&P 500 in half, then you would approach the level of maybe fairly valued. This is the old Buffett Indicator. Whenever you, and Buffett popularized this indicator, which has been less relevant, particularly after 2008, as we've engaged in socialism for the rich or, lower interest rates and credit expansion to prop up asset prices. So in Buffett's day, this made sense. And in Buffett's day, you have from the 1970s, after the era of stagflation, you have total market cap to GDP was roughly 35 to 40% thereabouts. Tremendous buying opportunity. And this also coincided with Fed funds, which had come from, you got Fed funds was up to 18%, 19%, and then they lowered it precipitously. They got inflation under control. And this was a tremendous buying opportunity. Total market cap to GDP was low. So the rough rule of thumb is any time that the total market cap to GDP is above 100%, so the price of all stocks exceed the productivity of the market, they're relatively fairly valued. And when total market cap to GDP is below 100%, perhaps a buying opportunity. We now stand at the most expensive stock market in stock market history. Total market cap to GDP of 216%. So it's not necessarily a selling indicator, but it's just a rough rule of thumb to understand how expensive the market really is. But then again, you have to remember that this is crack up boom territory. So the reason I deleted that short was because, yes, we're in crack up boom territory, but also we're in central planning territory at this point. So after 2008, after they recapitalized the banking system, lowered interest rates to zero, and that's been the name of the game for the past couple decades now, you really have central planning. You have bailing out the market, as evidenced by Pam Bondi saying, don't worry about the list, we've got the Dow at 50,000. So they're targeting asset prices. So will there be a sell-off? I'm being a little facetious about Jim Cramer. There should be. One would expect that a war is not exactly great for productivity. And I think there is starting to be a realization, perhaps what this declining price tells us is that there's starting to be a realization that the longer that the war goes on, the more of a snafu and absolute shit show this ends up being. The higher the oil price, the more imminent a recession is. At some sufficiently high oil price, you are going to get a recession. Now, correct me if I'm wrong, but I thought there already was a recession and they changed the definition. So we're off in la la land territory now, is what it is. This is why my contention is that basically they're going to lower interest rates over the long run. You don't know what these central planner policy maker decision folks are going to do arbitrarily, but one would expect that you're going to, obviously this looks like higher oil prices for now. It seems like a ground invasion is in the cards because they can't pull out now. They're going to double down. And I would argue that anybody who's analyzing the current situation and assuming that this is just we don't know. No, some people know. Some people know, and that this is going exactly according to plan. They want a crisis. They got a crisis. They want a war. They got a war. And they're going to double down. And they have no problem sending you and your kids to go die in the Middle East on behalf of Israel. They're good with it. They're happy with it. So ostensibly, we get higher energy prices. I mean, I don't want to try and predict the future because, that's the name of the game of financial markets. Nobody knows what the future actually holds. But you do start to see that the S&P 500. So, I mean, this is zero interest rate policy. Like, this is what we've gotten. With absent bailing out the banking system in 2008, zero interest rate policy, unlimited credit expansion. I bet we would all be stunned at how much credit has been pumped into the banking system in general. But most of this gain is the result of money printing. And just to give you a quick correlation, if you measured, I did the measurement from 2014, but pick your time frame. If you invested in the S&P 500 from 2014 to now, you would have, with dividends reinvested, you would have made about a 13% annualized compounded return. And if you just held gold, you would have made about 12.7%, if memory serves me right. So roughly what that tells you is most of the gain in the S&P 500 has purely been as a result of credit expansion. Why take any risk? Gold is deemed a tier 1 risk-free asset according to Basel III banking regulations. I know that Wall Street has this wrong. They call treasuries the risk-free rate. I think Americans are going to learn the hard lesson on that one, that treasuries and government debt are not risk-free because that adage denies inflation risk. But anyway, you go look at a chart of gold and you see this is what is called the crack up boom. So we are entering into what I would suggest is probably hyperinflationary territory. Who knows how much worse the inflation gets? It does seem like we are on track to get a significant inflation boom in the USA, probably globally. But the gist in the name of the game is Donald Trump. I will remind you, and this is why I made the cover photo of what it is. Donald Trump is the king of bankruptcy. All right? Donald Trump is the king of bankruptcy. Donald Trump is the king of bankruptcy. The world starts to make a lot more sense when you consider that the current state of affairs serves and meets the objective. It is a success. It's not a failure. This is not, you might look and say, oh, it's a war, it's a quagmire, it's a terrible situation. This is a success in some people's eyes. This serves exactly the aims that they have. They want a war. They want to destroy the American empire. And who better than to have the king of bankruptcy himself to take down the American empire by making all of these moves? I mean, you can listen to these people talk. You see that Donald Trump is purely lying. The guy's just winging it as if he's in the list and completely captured. Like, I don't know what else you can say other than, truth is the first casualty of war, and clearly these people are not being truthful. So, from my perspective, it seems relatively obvious that they are going to proceed with a ground invasion. Obviously, this is a complex geopolitical situation with a lot of moving parts, and I'm not going to try and predict or prognosticate the future. But you look at the chessboard, as it were, and you say, is that not the most logical move that they make? They continue with a ground invasion. It is the method to carry out a war. A war is the perfect pretext for the issuance of debt. A lot of people get paid. A lot of military contractors are in favor of that. A lot of defense stock. There's a whole group of folks on the East Coast who love the idea of war because they make a lot of money. So, and it also makes sense along the timeline of things that the U.S. has reached the end of its decadent, degenerate period in history. There's too much debt. $40 trillion is never going to be repaid. And the only solution at this juncture is to purely inflate. So inflation we will get. The war is the scapegoat for saying, had to do it, had to put troops on the ground, etc. But this also begs the question, do they not want, they want a civil war? There's no better method to facilitate instability than there's no better method to bring about domestic strife than to institute a draft. Be catastrophic. Number one, you should think about this and think, if they do institute a draft, what are you going to do about it? And get a couple steps ahead, because they are most probably, unless something changes, it looks like they're going to have a draft in the United States. And what will happen as a result of that? Civil war, because there's a lot of folks who are going to say, I just ain't doing it. A lot of people got fleeced by the Iraq war. Weapons of mass destruction, that was all a lie. 3 buildings, 2 planes, we all know that was a lie. But there's definitely a subset of the American populace who, you can say 3 buildings, 2 planes to these people, and they're just like, oh, I know a guy, I explained it to him, and I was like, I said, explain to me this, 3 buildings, 2 planes, 3 buildings, 2 planes, how does that happen? How do make this make sense to me, bro? And his answer was just like, oh, anyway, I don't know, moving right along, just cognitive dissonance. So there is very little logic in America, and you can't help but notice, and you just go, I couldn't help you, bro. Anyway, so a draft seems logical, and they already have surely game planned this out, and therefore you would say, they must want a civil war. So what better way to get, because what comes with civil war? A military occupation. You know? You get martial law, which, that seems like a direct method to get 15-minute cities and the technocratic police state that everybody seems to be so fond of. So, be that as it may, I think we're going to leave it there. Jim Cramer has given us the answer here. So if that's not a sell signal for you on U.S. equities, I don't know what else you need.